So I think the advice that I give generally to founders is like apply as soon as you have an idea. There's no harm in applying. You can apply times.
Yeah.
There's good feedback even if you get a rejection. The second piece is try to get traction as soon as possible. Because traction speaks a lot. It's not only to impress YC or impress some VCs. It's just so that you get to know your business much, much better by talking to users. And the third is have a co-founder. I mean, and I realized this as we kind of progressed through the company. I thought having a co-founder was just about technical skills. Like you have complementary skills and that's the reason you need someone. But it's much more than that. I think it's a super lonely journey. And at some point you realize that no one else gets you apart from your co-founder. Like literally no one understands what you're going through. And it's just so helpful to have someone.
Hey everyone, welcome back to the Ignite podcast. Today we're delighted to have a portfolio company on the show from Yenmo, the CEO and founder of Yenmo, Ashutosh Purohit. Ash, welcome to the program. Would love to get an intro from you for the audience.
Hey, thanks for having me, Brian. I'm meeting up after a long time, So, I'm Ashutosh this side, run a company called Yenmo that's based out of India. We offer loans against mutual funds and securities. If you have like a mutual fund or a stock, you can come to us. We hold those collateral and then give you loans at super low interest rates, roughly like 50% lower than any other personal loan in the market. I run this along with my co-founder, who's been a long time college mate of mine, Aryan Agarwal. So it's the two of us running the show, right?
Very cool. How did you guys come up with this idea?
It's pretty interesting. So prior to this, I was working at this company called Navi. Now, the founder of Navi is actually the founder of this e-commerce company in India called Flipkart. It's like an Amazon competitor in India, right? So he left Flipkart and then he started up his new venture, which is Navi. And he wanted to disrupt the financial services space, starting up with loans and mutual funds and stocks. I joined in at a time when they were like 2.5 years old. And Sachin Bansal, who was the founder of the company, he was setting up the mutual fund arm. So I joined in, and the first task he gave me was, hey, Ash, just like build a mutual fund business for me. And the goal is eventually to become like the top 5 mutual fund companies in India. So I learned like finance from scratch. And one of the things that I realized, because we were doing mutual funds and we were also giving out loans. And what I realized was the number of people coming to take loans, around a third of the people actually had investments in mutual funds with them. And it was surprising because they were coming in spite of having mutual funds, they're coming to take personal loans at really high interest rates. For context, the average interest rate was around 25%, just super high. I don't know, it sounds super high for US, I understand, but in India, it is high, but not like really, really high. So they were coming in and I was calling them up like, why are you not holding your investments as collateral? Reduce your interest rate significantly. They did not know about this problem. Obviously, as we dug deeper, we realized there are multiple layers to this. But that was like the start of all of this. That one insight when I was working back now.
So what is the corollary in the US? Like, because, when I first met you, I heard the idea and I was like, well, that's an obvious thing that should exist. I know in the US, you can borrow against your 401k for like a hardship loan. Maybe if you're kind of a wealthy person, you can go to your bank and say, hey, I'm going to put up some collateral. I have some stocks and mutual funds, whatever, underwrite a custom loan for you. But what is it about this market that makes it different from the US?
I think there are two things. The first one is, I think US is fundamentally a little more mature than India. Mutual fund and stock investors in the US is roughly, I think, around 65% compared to India, where it's 8% right now. It's obviously growing really, really fast. So in the US market, people are generally more aware of these things. The second piece is that in US, structurally, the broker, the person who's like holding your stocks and mutual funds, he can directly lend out money to you. And that's not allowed in India. So the broker cannot lend you money for your personal use. You can give you a margin that you can reinvest back into the stock market, but you cannot take a loan out from the broker and use that. But it is allowed in the US. There's those two structural differences between, I think, US and India. And in India itself, like, why hasn't this been popularized till now is it's just been a super offline process. Like, as you were saying, like, the rich people didn't know how to do this. They had a bunch of wealth managers running around doing all the paperwork. But for a normal Indian, he doesn't have 2-3 weeks and some guy signing all papers for him, right? he needs the money right now. And the only way out is a personal loan that gives you money in like 2 minutes. So it was a super difficult process that required a lot of time. And one thing that we're, I think, differentiating ourselves and making it easier for customers is from like a 2-week process, it now on our app, it takes 2 minutes. And that I think is going to be the big change that we've been able to bring about that kind of helps increase, I think, moving forward. Like people like look back to this and say, okay, well, that was fairly obvious. But yeah, it was the time difference that made all the difference.
I'm curious, do you think the best business ideas are obvious when you look at them, or they're non-obvious?
If you think retrospectively, it always seems obvious.
Of course I would use my phone to order a car.
Yeah, exactly. Like, of course it makes sense to sit at home and order food. Like, why wouldn't it make sense? But I think it's having the insight at that moment when it's not popular.
It's just not widespread, but it's obvious.
Yes, exactly.
Yeah, it's like, obviously you should be doing this. And we're just talking about another potential investment that I was talking to before this call. And I'm like, this is obvious, like people should be doing this, but it's not widespread. I just wonder as an investor if I'm just looking, if that's part of the thesis, right? I have lots of different things. There's like 100 things I look at when I'm making an investment. But maybe that's like one of them. It's like, oh, is it a widespread, high friction problem that's obvious it should exist, right? There's an obvious fit here.
Yeah, and I think when you kind of start digging deep, there usually is some fundamental reason on why it's not happened till now. Like in India, the reason for, say, food delivery not like being super popular was internet was not really affordable for a lot of people. So internet got super affordable when there was this company called Jio, which entered Reliance. It entered with 5G. So now you have like really like affordable, super fast internet. Exactly, which now made it possible for delivery boys to like access maps, locations, all of it. And now you can have this whole thing where people can roam around, deliver your order, and not have to worry about racking up a huge bill. It kind of made sense. Okay, this is the right time. Now you have like super fast internet, it's affordable.
And what did you see in the market that was kind of the why now for Yenmo, right? Because you obviously had a lot of success in your career. You could have just kind of kept climbing the corporate ladder as it is. But like there was something about the timing of this idea that you're like, I got to go tackle this.
There are two things, I think, for me. The first one is this is a time where the mutual fund market in India is growing at roughly around 25 to 30% every year. So we're almost like doubling.
Every couple of years, call it. Yeah.
Yeah, in a couple of years, right? Prior to this, the number, like we weren't at the threshold of the number of people would probably want such a product because the number of mutual fund investors is so small. But with where we are, with around 80 million odd folks, 800 million, I think, odd folks having like investments with them, and now that kind of doubling every couple of years, it makes a lot of sense to now start it. The second piece is it wasn't possible to do this entire thing digitally a couple of years back. So the whole part of this thing was, as I was talking before, right, it was completely offline. And there are a couple of like regulatory bodies that need to digitize their own processes to be able to kind of make this whole process online faster. So there's some tailwinds coming from the regulator in pushing these bodies to kind of digitize themselves, which helped us at the end of the day also like quickly work with them and end up digitizing the process. So if you wanted to do this like 3 years back, you'd have to do it completely offline, which would still take you like 10 days. If you want to do it now, with the digitization, you were able to do it in like 2 minutes.
Interesting. So there was this, digital transformation of the industry that just occurred as well. Because now what you're basically saying is, what's the mechanism of escrow here, of putting up your retirement funds or assets as collateral? What does that digital process look like?
Yeah, so the way it works in India is the mutual fund, there's an asset management company which does all the buying, selling, and managing all your units. And there's a custodian of all those units, and in India, they're called an RTA, a registrar and transfer agent, right? So these are the people who manage, they're like the ledger book guys. They have all like the history of all your buys, your sells, what's your portfolio, all of that, right? So we have like around 40, 50 different asset management companies, but we have only two RTAs, right? Only two of these custodians. So what we've done is we've kind of integrated with them, and they're the ones who hold like the responsibility of owning the assets and ensuring that once they're pledged, you cannot sell them. Once the loan is over, you can sell them and all of that, right? So what we've done is we've integrated them, and now we use them to kind of access the portfolio, hold things as collateral, and uncollateralize them once the loan is over.
Interesting. So there is a mechanism where you're like, hey, this person, this asset ID, this person ID, or this, is now put up as collateral. What's the default rate been so far on these kind of loans?
0.
Wow, that's amazing. That means 0% of people you've underwritten one of these collateralized loans for has defaulted. They've always made their payments.
They've always made the payment.
That's amazing.
That's the beauty of the thing is, even if they were to default, there's something called like a margin that we keep over and above. So if you have $1,000 in assets, we're not going to give you $1,000. We're going to probably give you $800, $700, depending on the volatility.
Account for the volatility of the underlying assets. You don't want the stock market to go down 25%, and then you're underwater on your, kind of like underwriting a mortgage.
Exactly. We've safeguarded ourselves. Yeah. And the goal of this asset class is to be like 0 NPA, 0 defaults. And that's the pitch that we use, and then raise money at much lower cost.
Well, even if they can't make a payment, they can probably reach out to you and say, hey, I can't make the payment for 3 months. And then, okay, great. We'll just have to sell off a little of your underlying asset to make that payment for you. I mean, is that how it works, basically?
Yeah. I mean, we haven't had anyone come back to us telling that, but that is possible. Like, people can come back and just say, you know what, I don't have the money, just sell the portion that covers the loan and then give me the rest back. Totally fine.
So what was the whole thought process? A lot of potential founders want to get into YC. You obviously went through that program. I think it's probably even harder to get in from India, right? Like, what was the thought process of applying? Like, what kind of advice would you give to potential founders applying? And what do you think it was about you and your team that YC was like, yeah, let's make a bet, right? Because they only have 250 slots, right?
No, absolutely. I think on the YC, it was, I wish I had like more structured answer. Like, I searched a bunch of VCs and YCC in the value. It wasn't actually like that. Like, back in college, I got to know about YC through like one of these tweets that PG has put out. He was talking something about an essay, and then a lot of people are praising it. I was like, oh, what's up? And then I ended up reading it, and it was really interesting. And then I went about YC, and it kind of just like, since those college days, it just hit me like, okay, I want to see myself like talking with this person and seeing what this group is all about. And then over the years, as I started learning more about like started doing all that, it kind of like just became a dream for me. If I do a startup, I want to get into YC. So before we pitched to any investor, the first thing we did when we thought of this idea, me and my co-founder, we just opened YC and just applied without giving it a second thought. And we did apply twice. The first time we were not rejected, because the first time we applied, as he said, like, it's super hard for Indians to get in. We just had an idea, and we launched like a very basic MVP. We had some designs, and then the feedback, we did get an interview call. The feedback from YC was, I think you need like more users, talk to them.
Yeah. And Sam Altman was talking about how they had a track for a while where it was just team, idea, no idea, and they don't let people in with no ideas anymore. You got to have an idea, and preferably some traction. I think they do look for traction a little bit, but not always.
Yeah, I think traction is something they definitely like double click on. If you do have traction, that's really, really good. So that worked for us when we applied the second time, because now we had tractions, we had users. And coincidentally, I think our pitch was completely different from what we applied the first time. And that, I think, was super helpful. I think the rejection proved much more useful than if they had just taken us the first time, because I believe we got to know a better level of our own business by just taking the feedback that they'd given of the rejection and then just going back and talking to users again, launching a better MVP and all of that. So I think the advice that I give generally to founders is like, apply as soon as you have an idea. There's no harm in applying. You can apply multiple times. There's good feedback even if you get a rejection. The second piece is try to get traction as soon as possible, because traction speaks a lot. It's not only to impress YC or impress some VCs. It's just so that you get to know your business much, much better by talking to users. And the third is have a co-founder. I mean, and I realized this as we kind of progressed through the company. I thought having a co-founder was just about technical skills. Like you have complementary skills and that's the reason you need someone. But it's much more than that. I think it's a super lonely journey. And at some point you realize that no one else gets you apart from your co-founder. Like no one, like literally no one understands what you're going through. And it's just so helpful to have someone
who's just there in the trenches with you.
Exactly. Who knows what's going on. So, and you're there for them. So you guys go through this highs and lows together and then just there to help each other out. So it's super stressful. Definitely recommend having someone to be there with you.
Yeah. And so when you initially applied, did you already have your co-founder?
Yeah, I did. I knew him for like a long time before, and it wasn't really planned. Like I'd gone to his house one day, I quit my job, and I had these bunch of ideas, and I was experimenting on myself. And then he was doing his own thing back then. I just happened to like talk to him, like, hey, I'm thinking about this idea. This is what I'm doing. And he was actually building an algorithmic trading software. So he was into like finance stuff from the tech side. And I was like, did you know that you can take a loan against your mutual funds and then use that? He's like, I didn't know about that. I'm like, yeah, I'm trying to build that out. He's like, that sounds cool. You mind if I join? I'm like, well, sure.
Yeah, let's do it.
It was like a 5-minute conversation in his house. And then we were like, okay, let's do it.
How did you guys know each other? Because I get this question a lot from founders. Like, how do I find my technical co-founder?
Oh, yeah. He's a friend. Like, we went to the same college, but me and him graduated from this college called BITS in India. So we met through a mutual friend back in college. And yeah, we've known each other since then. We got jobs in the same city, which is Bangalore. Yeah, we hang out a lot even before all this started. We always had the discussion, like, we want to do something. So yeah, this was like, why not now? Like, we have the idea, we're both interested, like, let's just do it.
That's amazing. And then, so how far from like, okay, let's work on this together until like you applied and got into YC?
We applied as soon as like within 2 weeks of us just like doing the handshake. So we said like, let's work on this. And then within a week and a half, we'd launched like an MVP. And it wasn't really an MVP now that I feel the MVP definition has to be better. It's kind of vague, right? It was like this really broken product. You had to put screenshots of your mutual fund investment. And we just told you that you're eligible for this amount. We didn't really give a loan and all of that. So yeah, so it was like this super broken MVP. Just launched it. We got like 30, 40 odd folks saying that I'm interested. And they uploaded a couple of screenshots. We're like, yeah, okay, this sounds good. So we did that like a week and a half. And then we'd applied twice immediately after that. And then they came back to us saying, well, I don't think this is going to cut it.
That was their original feedback.
The feedback was, I think you're too early. Like, we really like you. We like the team, like the idea. But I think there are not a lot of data points. A is that there isn't really a big company in India that's doing this. And we understand why, because it was never the right time till now. So we don't have like any past data points to take. And two, like, you don't have any traction as of now. So
yeah, you got looks like some screenshots. Yeah,
exactly.
As an investor, I hate it when I get on a call and they're demoing Figma to me. And I'm like, I'm a PM, right? I know what Figma is. Like show me what you've actually built. Like, not...
We'd uploaded like a Figma prototype on the YC application because it was a week and a half. We didn't have anything. So we ended up uploading it. Yeah, but the next time on, we did the proper app and everything.
Yeah. As an investor, right, like alarm bells go off. I'm like, great, you can put something in Figma. Can you actually make it work, Because going for Figma, it's easier than it's ever been, Like I started building products like 2012. It used to be pretty hard to take it from design to app. And now it's, 10, 12 years on, it's a lot easier. But still, there is a lift there, So what, I think thinking about YC, and maybe just on like a self-reflection, what do you think it was about your background that they liked, that they're like, okay, we want to make a bet on this person?
I think the biggest thing that probably helped is like founder market fit. The both of us have worked in the finance domain. I've worked in mutual funds, I've done lending, I've done also insurance. So there's a lot of finance stuff that we already know, and the insight has come from our work experience. It's not something that we've just heard from somewhere, or like some external person telling us, hey, this is a problem that you should work on. So I think that's the biggest thing, that a lot of people like don't like cut the threshold for that. It's just not being like in the product market, like founder market fit. The second piece is probably also like pedigree of, I don't mean to say like a person from like a decent college is going to like 100% do well in life, and a person from a not decent college is not going to do well. I think it's people just say bets on like probabilities of people doing well or not.
Yeah, I think this is an interesting philosophical discussion that I think about and worry about as an investor. You know, how much past success begets future success, right? And like, because you went to a good school and had success in your career, does that mean you'll have success as a founder? That's a question, right? And then another thing I think about is like, what drives and motivates founders, right? Like, what's the chip on your shoulder and why is it there? Like, what is it about your background? And I think YC specifically has something like this. Like, what's the hardest thing you ever accomplished? I think is a question that they ask from the application.
Yeah, and they do ask like not the hardest. What's like the most? I forgot the word that they use. What's the most hackiest way in which you've done something that's probably not legal? Like, we're happy if it's not legal.
This is a very common thing with founders, right? Like, you hear about Steve Jobs, like ripping off the phone company, right? They figured out how to send like touchstones through to kind of patch long distance calls through. And then that was an illegal operation technically. And then I think like Sam Altman had one, Elon had one, Peter Thiel had one. They all had like these like weird hacky entrepreneurial ways to kind of game the system. And, you know, definitely Uber did a lot of that as they grew pretty rapidly. And Travis had kind of a background of that. So I think it's kind of like a common thing that I've been thinking about as an investor looking for in my founders. Yeah, what's your kind of, you know, tell me about your earliest entrepreneurial experiences. And there's probably some sort of interesting story there, you know, for the best founders.
I think the most interesting stories were once I started, I think the company, we put a couple of them down in the application also. But yeah, I think at this stage, I'm not really sure if we can publicly start disclosing all the stuff that we did do. But yeah, I think prior to starting up, I think something that, like, when I sit back and think today on like, why am I here? Like, what did I do in the past to kind of get to this point? I think one of the fundamental changes that occurred in my life was when I started doing engineering. Right? And I know like most people in India end up being an engineer, but the thing about engineering is it's the only subject I feel, at least from my limited knowledge, where you can have like an open-ended problem, you work on it like from the start. So I was part of like a robotics team back in college, and we had this like open problem: build a robot who could kind of play badminton. Right? There's no one to guide you. Like, you start thinking from scratch, build out this robot, and then see if it works or not. And that kind of hooks you on to like loving the process of just building something. And at some point, you do care about yourself winning, but then you also just love this process of building, right? And I think it was obviously, it's like, if you're a computer scientist, you love building code. If it's a mechanical engineer, you love building like hardware stuff, electrical, do that.
If you're a finance guy, you love building spreadsheet models. Yeah.
But that actually came after my engineering.
I started in finance and I moved to tech. So like, I can relate to that. Like, you know, finance, it's kind of like the lingua franca of business. It's how you engineer things in business. But when I started getting into CS in my 30s, it was kind of like, oh, like, this is like a superpower. I can like build something that millions of people can use. And I remember having that aha moment of like coding and like, wow, I've actually built something people can use.
And that feeling stays, like the feeling of you building something, and even if like two people use it, you're like, wow, this is something cool. And I think that helps people. Like, it's easier for like an engineer to just become a founder because you know the feeling. You're like hooked on the feeling of building something that you or someone kind of uses, and then you just like the feeling of building something. And so that it is, for me, I feel that kind of transformed the way I looked at like starting up and stuff. obviously like working and all that's super cool and comfortable and all of that. But there's this joy in just kind of building something from scratch.
When you look out, for Yenmo, the 10-year vision, what do you guys hope to accomplish?
So the goal for us is to become a bank at the end of the day, like a full stack, full service bank. I think the current banks, the large banks in India, have become like super complacent in their tech. Obviously, they're trying. And there are a lot of companies that are also trying to kind of replace them. There are a lot of fintechs and all of that. I think the goal for us is to kind of eventually become this one place where people can kind of come to and access reliable, like be secure that their investments, their data, everything's secure. It's super user-friendly, and obviously tech first, right? And when we obviously start that by giving out loans, because I believe it's much easier to convince people to take money rather than take money from you rather than take their money into your pocket, right? So it kind of lowers your CAC. So yeah, we're starting off with like taking loans against mutual funds, and then eventually keep broadening that base. It's mutual funds, stocks, FDs, gold. Eventually, it's like link all your assets to one place. And then eventually we start moving up the ladder, right? So now you can offer credit cards against it, it's debit cards, and then you start offering more complex banking features later on. So yeah, 10 years down the line, hopefully we should be like.
I love that. Yeah, you just kind of slowly, cross-sell, upsell your customers. Now, now they'll need this. Now they'll, hey, do you have a credit card? Do you have this?
It is a really low trust society. It's super hard for them to trust new tech, and that's the challenge. If you wanna build a company from scratch, it's even though your product is 10x better than your competitor, it's super hard to convince people that okay, come use me, just because they have this inherent trust that okay, I know this bank, I trust this bank, I'm not gonna trust anyone else. So that's I think the fun challenge of trying to build it.
Well, let's switch to a rapid fire. What's a book that significantly influenced your professional life?
I think there are two of them. The one of them was given to me by a mentor of mine. It's Never Split the Difference. And the second is a book that I have of The Psychology of Money.
Never Split the Difference. I read that a long time ago. Maybe for the listeners out there, you can, that's an interesting title. Like, what does that mean?
Yeah, it's on the art of negotiating. Like the end goal of a negotiation shouldn't be, okay, it's 50 yours and 50 mine. I think the goal is to kind of get things more in your favor. So yeah, don't just split the difference by 50.
Or find the differentiated things where it's like, you care more about this and I care more about that. And let's find that win-win where it's not just like 50-50, I get 50%, you get 50%, but it's like there's a differentiation between, oh yeah, you're valuing, like if you're negotiating a salary, right? Some people really value the stock more than the salary. And some people value like vacation and flexibility, remote work more than the salary. And so it's kind of like trying to find that, where do the two parties kind of align between, 2 units of this is equal to 1 unit of that.
That's a really good point, because that's the point that kind of also comes into play when you're talking with companies for like a B2B integration and stuff like that, right? You're stuck on the pricing and then you realize, okay, it's not on the cost. It's not that, okay, you want to charge $20 and they want to charge 10. It's now finding what did they value that's probably low cost for you, and then you can just add that, and then now they value your $20 much more, right? Even though it won't cost you that much. So that's, I think that was a super good insight from them.
What about Psychology and Money? I don't think I've read that one.
It kind of explains the way in which people just think about money and savings and investment. So it takes it from the scratch of also giving like background about the partying different around the world, different countries. If you were to end up splitting that money across people, why it would still kind of end up within like a certain segment of people? Because it's not that they've just accumulated well, it's how you think about money that eventually also attracts money, right? I think he covers a complex bit around macroeconomics and also around like individual things that you can do to just kind of get in the right mindset when you think about money and wealth in general.
Yeah, for me, I think I read definitely Rich Dad Poor Dad in college, but also Millionaire Next Door had a really big impact on me. Like, what do the average like millionaires look like in the U.S.? And turns out they didn't live in the biggest homes and drive the fanciest cars. They're just kind of normal, middle to upper middle class folks that just kind of lived within their means and saved a ton of money and just minimized their expenses, Anyway, what's your go-to productivity hack?
So this is something that I actually did when I started working. It's just building a task tracker. There are a bunch of stuff that you have to do, and most people just try to keep it in their mind. And I did that for a long time and just felt it's better if you just put it down. I just put it down in a spreadsheet and just have like timelines and who are like the POCs or people who are dependent, where is it stuck, like blockers and all of that, like a quick description of the problem, timelines, all of that. Just put it in a spreadsheet, no matter how small, how big.
I've always had a problem with task trackers unless I'm running like a sprint, right? Like, okay, we're a team of 5 to 10 people and we need to coordinate our tasks. That's like one thing. But for me personally, I've always had this, like, I do have a task list, but I use the Gmail built-in one. And I try to sort it every once in a while. Like, here's all this stuff I need to do. But I tend to live in like my inbox as a VC. It's kind of like, okay, founder needs this, LP needs that. And like, it's just all coming into my inbox. And then, oh, okay, there's an update and there's an ask and there's this. And so I just tend to use my inbox as my task master list, but for better or worse, it's not great, but.
Yeah, I mean, I do that. I just keep like things unread on my email also. If I feel like, oh, this is something I have to come back to. But yeah, there's a lot of stuff that's just not on email that you have to get back. And I think getting to the email thing is, as soon as the new email pops up, you're like, okay, this is my focus. Let me do this now. And it kind of like creates a whack in the prioritization. I just found it helpful to screen like this task tracker and then like come back to it before you go onto the Gmail. And
yeah, I wish Gmail had more dimensionality to it rather than just the 4 tabs. Like it had, you could almost make a Kanban board of email. What's the best piece of advice you ever received?
I think this is something that I actually got from my co-founder, which is anything that you do it's got to be a marathon. It's not going to be it's not a sprint. So like try to think more long term and don't kill yourself trying to kind of just beating yourself up for the short term. So this is actually a time where like we were going through this rough patch in the company. It was super hard to like we'd lost our first lender. We were getting a new lender and it's super hard. And I was like just super frustrated. And my co-founder was like, hey, man, we're going to do this for the next 20 years. Like, what's a couple of months of extra effort? Like, you're not even going to remember this like 5 years down the line. So don't stress yourself. I think we're doing this for a long time. So
I like that. I like the long-term thinking, right? It's something I look for in founders, Yeah, what's your vision in 10, 20 years? And, what a wise co-founder you have to kind of say, hey, look, we're in this for the long haul. This is short-term problem.
I think that's really lucky in that sense also. So I think that's the beauty of startup, right? You have to like think long term, but also execute short term. So you have to always be in the balance. Because if you're too long term, he's gonna say, "Oh, it's a long time. Everything's gonna be okay."
Yeah, you have to have a sense of urgency too in the present,
but not kill yourself having that urgency today.
You got to have a sustainable pace, right? Like I think life's like, I think you learn that too as you burn yourself out at jobs and startups and stuff. You kind of like, maybe I shouldn't work on a Sunday. Maybe I should actually just kind of put everything away and just have.
Maybe that vacation could be a vacation.
Yeah. Maybe Brian, you shouldn't work on vacation. Not burn yourself out. We're recording this right before 4th of July. I probably won't come out until a week or two after that, but I'm going to take a couple days off this week because I really just need to like not do anything for a couple days. What's one technology trend you believe will dominate fintech in the next 5 years?
Well, what we're building, secured lending, like being able to take assets as collateral and digitally just offer loans at super low cost. Instant. I think that's going to be insane. Like, India's a credit-hungry market.
Such a big unlock. I have in the notes karate or gym. Why do I have karate in the notes? Is karate in your LinkedIn profile or something?
Oh, yeah. Oh, I do remember now. I done it like when I was in like 5th grade or 6th grade. I'd done like this karate.
So somehow it ended up in your LinkedIn profile.
I don't know.
Maybe it's one of your old buddies like endorsed you for karate on your profile.
Yeah, I'm not even sure. I probably have to go back and check.
That's so funny. It found that.
Oh, Yeah, a bit surprised. I thought it was just a generic thing like karate or gym. But oh yeah, it's probably referenced it from some profile.
That's so funny. Yeah, how do you stay fit as a founder? Like, how much time do you dedicate to that? And
Oh yeah, I hate gym. Try to do it every day, but obviously it's not always possible. But yeah, I kind of try to give at least an hour every day to some sort of like physical exercise. If it's not the gym, try to just go on a walk, run, swim, just play a game, something like that.
I have the tonal machine. Have you heard of this?
Tonal machine. No.
TONAL. It's basically this machine that hangs on the wall and has some arms that are all configurable with lots of different, ropes and pulleys and bars and stuff like that. And it's almost like a Peloton for lifting weights.
Oh, is it like this calisthenics thing?
No, it's like real weight. Yeah, real weight. So like bench press and pull downs and
Oh, okay, yeah. The one machine which has all the stuff.
yeah. My wife got it for me for my birthday a couple of years ago, and I love it. And anyone who's an ardent listener of this podcast will know that already because I probably mention it every other episode. But it's a really great machine. So it's like they have these like programs, and you go do it, 20, 30. I mean, they have like hour-long programs, at 15-minute programs. But I usually do a 20 or 30-minute program every day, and that kind of is doable for me in a half-hour slot on my calendar. I just kind of go up there and do it.
Well, that's insane. I think that's the beauty of like fitness, right? You have to do something that you can do again, like in the marathon, right? You can do it for the next 20 years. Like, what is that 20-minute, 30-minute thing that you can do for a long time?
Favorite city in India for tech outside of Bengaluru?
Probably going to be Hyderabad, which is already, I think, the next tech city in India. It's in a neighboring state in India.
Bangalore has kind of been the leader for tech, right? And now Hyderabad is coming up as sort of the leader now.
Yeah, so there's already another city. It's called Delhi, Gurgaon, in the northern side, which is also growing a lot. Personally, I've been to both places, and both of them are fantastic in terms of infrastructure, people, and talent, and all of that. I just think Hyderabad personally could be challenging Bangalore in the next couple of years, maybe a decade or so.
If you could have one superpower, what would it be?
I think maybe being able to pause time, because I think we're always short on time.
That's mine.
Oh, is it?
That's so funny you said that. I was like, the first one I thought of was like time travel. I was like, time travel, I've always been fascinated with that. But then you kind of get into all kinds of weird time paradoxes and stuff. But I think being able to just hit the pause button and I'm just going to go like have a day off from everything, play video games or read books or whatever. I think that'd be really cool.
Yeah, I think you're always short of time. I think as a founder, obviously, you're also like a founder, like building the Wheaty.
Always short on time. It's always as evidenced by me working like at least 6 hours yesterday. I have to get stuff done. You're like, okay, this founder needs that and blah, blah, blah. Last question. So what's one misconception people have about fintech that you'd like to change?
I think a misconception in India is that all loans are bad. So if you just pick a random Indian and you tell I have a loan, they're going to look down on you. It doesn't matter if you tell them I took it against my asset. I have like more than 10 times the assets for which I took a loan for. Like, loan is bad.
Loans are bad. Even like a mortgage on your house or?
Yeah, everything is bad. You want to close it ASAP. There's the concept of, there's a low interest capital flow. Maybe I could figure out different ways to invest money and ensure like.
Was there debtor prisons in Indian history? Because I think we had them in the West might have been until pretty late, 1700, something like that, where like if you're in debt and you can't pay your debt, they just throw you in prison. And so it took a while, I think, in the West too, to be comfortable, that kind of loan, having debt out there.
I'm not sure. Are you saying like if you have debt, you go to prison?
Yeah, like in European culture, that used to be a thing.
Oh, wow. I know. You don't go to prison.
I don't know when they stopped it, but it was, hundreds of years ago. Yeah.
In India, it's like there are a lot of regulations that if things have to go legally, you cannot call the person after office hours. You cannot abuse them. You cannot send people to them, obviously. And in the end of the day, if you don't have money, you cannot do anything. You just have to write off the money, like leave them alone.
Yeah. I'm actually looking to invest in a company that uses AI to do debt collection in the U.S.
Oh, that's super interesting. I also heard a couple of companies trying to venture into that. I think they take all these like all this information coming in and then use AI.
You can just run a multi-channel outbound strategy. Hey, you owe us some money. What can you pay? Like instead of having people, offshore do that or whatever it is, whatever that cost is. You can just have AI do it at scale and probably have better results. And so far they're having better results. But anyway, so for anyone listening, where can they learn more about you and Yenmo?
You can just check out our website, which is www.yenmo.in. If you are in India, please download our app. We're there on the App Store, Play Store. You can just search Yenmo, which is Yenmo. We should show up on the top. If you're not, please let us know. We should be on the top. But yeah, I think just download the app. If you need some money, do use it. If not, would love any feedback coming our way on the UI process. Anything. Happy to hear you guys out.
Well, thank you so much for coming on the program. Really appreciate it.
Same here. Thank you so much for having me, Brian. Lovely talking.